I think our last episode was Feb, so it hasn't been too much of a long gap, but a lot has happened economy-wise, within finance, rates, banks, just the state of business and the economy in general. So I would like to get into that and unpack,
Yeah, I think, the big one was the hike. I guess it was a shock to all of us, actually.
And we didn't get it wrong.
You did get it wrong.
I was about to say the funniest point is how far off the mark the people we trust to make those calls were.
And it's crazy because maybe just to get to the economy really. We generally follow the Fed, right? They usually meet a week or two before the Reserve Bank for us, and then you kind of get a sense of what's going to happen after that, So I think they did 25 basis points. And they're having a huge banking crisis. We'll get to that. But they did 25 basis points, and then, and Lesotho did 50 for us. And it was a bit of a shock. It has almost forced us to all think about, actually, okay, where are we and what's happening? And I think if you are a business owner, even as consumers on our own, you kind of have to rethink things like, okay, like what, where are we going? What's happening? If you know what I mean.
Yeah.
So I think it's quite important for us to kind of try and make sense of what he did, and if it makes sense.
Cool. Welcome to another episode of the Business Agenda Podcast, episode 15 to be specific. My name is Cash, also known as Uncle Cash, also known as the Joburg Bachelor. As always, thank you for catching this podcast. It's available on YouTube, and if you want to hear audio, Spotify, Apple Podcasts, and wherever you listen to your podcast, we are available. Go around the room and acknowledge my fellow co-hosts. We've got my good friend Teaser.
Yeah, no more Tabo. We can say Tabo the best.
With what's currently happening, I made a point to say this is my friend Teaser. Yeah, like you can sidestep the name Tabo.
It's a lot.
Yeah, it's a lot right now. We've also got Miza, real name.
Yo.
Mr. Mojake, how are you, Itumeleng?
I'm good. I see people are going on about Tabo, Teaser, Ashraf Hakim, man.
We will get to Ashraf Hakimi. Like, as you can see, Miza's itching to give the City Boys an acknowledgement, but also would like to thank you guys who watch our podcast. As always, we do not take your views or spins for granted. Keep listening, watching, sharing the podcast, share the link, pass it around. As always, the aim of this podcast is to give a very open and broad view to all topics as they relate to business without drowning you in technicalities, though we have people who are more than capable to give you the nuts and bolts and get to the gritty of things. But, we want everyone to get a piece of something with each topic. As always, I'd love to acknowledge the man behind the visuals, the equipment. You never see him, but Tsepo, shout out to you. He makes our things happen as the videographer. Make sure that our faces are shining bright. We look good. And for those of you who now know from the last episode and the episode before that, we have Nico, a new addition to the team. He's always been around. So the man, the beginning and the end, the alpha and omega, go back and check that episode. Great episode on investing in properties in the townships. Gentlemen, how are you doing?
Oh, good, man.
Yeah, I think our last episode was Feb, so it hasn't been too much of a long gap, but a lot has happened economy-wise, within finance, rates, banks, just the state of business and the economy in general. So I would like to get into that and unpack,
Yeah, I think, the big one was the hike. I guess it was a shock to all of us, actually.
And we didn't get it wrong.
You did get it wrong.
I was about to say the funniest point is how far off the mark the people we trust to make those calls were.
And it's crazy because maybe just to get to the economy really. We generally follow the Fed, right? They usually meet a week or two before the Reserve Bank for us, and then you kind of get a sense of what's going to happen after that, So I think they did 25 basis points. And they're having a huge banking crisis. We'll get to that. But they did 25 basis points, and then, and Lesotho did 50 for us. and it was a bit of a shock. It has almost forced us to all think about actually, okay, where are we and what's happening? And I think if you are a business owner, even as consumers on our own, you kind of have to rethink things like, okay, like what, where are we going? What's happening? If you know what I mean. So I think it's quite important for us to kind of try and make sense of what he did, and if it makes sense, and the thinking behind it.
Lesitsha will be upset with you if you mention that statement that we generally follow the Fed. He'll be really, really pissed with you.
Clearly he doesn't.
What I actually wanted to ask Miser is, from your perspective, is because no one expected a jump that high. Like Teaser prefaced was saying, it's normally the Fed, and then we can kind of guesstimate plus minus, but this one was very left field. What do you think the thinking was behind the change?
Yeah. The narrative is that you pre-COVID, right, and then post-COVID, to contain inflation, central banks need to show confidence that they will do whatever they do. You must remember that the SARB is independent, and then they must do whatever they have to do to anchor inflation. The reason why global central banks are hiking so aggressively like this is because they have a lower tolerance of inflation. It's like 2% or so. And then ours is the midpoint, 4.5, between 3 to 6, but 4.5. So, yes, it came as a shock. Maybe guys like Tisa might say that we got it right. But the thing is that we are in stagflation globally. US is about to be in recession. You spoke about the US interest rates and this SBV Bank. Interest rates going up. We'll talk about that later. But globally, we are all in a high inflationary zone with a low growth scenario. So if we look at our potential to grow, that's what we call like your output gap. Given South Africa's high unemployment rate, we wouldn't expect that the central bank to continue to drive us into...
I do have a theory. But I don't know if you wanted to speak. Yeah. So our inflation is more supply based, right? Like the suppliers, their costs are going high, and they're just passing it on to consumers for the most part.
It's more, you can say it's more supply based. Like retailers don't want to take.
Correct.
Don't want to take the cost. So what do? They pass
it on. Correct. Yeah. So I think. My own.
No, there's no wrong answer. Yeah.
I'm thinking the Reserve Bank is trying to force us into recession to correct the economy. We must suffer the short term while they're trying to correct the long term.
But that works in theory. If we talk basic economy, that works in an economy like US. It's big and functional. Not us, where unemployment is like 30% and there's no output.
I mean, this is why I was telling you about the mandate. Remember, previously we were speaking about their mandate is not broadened.
Yeah.
Right now they're doing what their mandate allows them.
In a nutshell, what you're saying, that's correct. That's what the Fed would normally do, and that's what the Fed would probably.
No, but even the Reserve Bank in this instance,
but they will fail because they don't have capacity to bring back that output.
That's why I'm saying it didn't feel like the 50 basis point is the right decision. But
it's a right decision to protect the currency. But what we saw, let me not talk technically, but what we saw in the FRA curves, now they're pricing in more cuts in the long term. So short term, the hikes are there. Last one, but now interest rate cuts have been.
Let me ask you, is it going to increase again?
Chances are.
To me, that means we must suffer in the short term for the greater benefit in the long term.
Yeah, if I can jump in here, right? This week, he actually came out and said that, according to him, he obviously was saying we must fix, South Africa must focus a lot more on the infrastructure side and, but he basically, he's saying we need to, he would even say that we need to have an inflation target of 3%.
Yes.
That basically means
he's not done.
Yeah, he's not done. Because he says to protect you and I, if he keeps inflation low, then you are essentially protected from, in the long run, I guess.
It's exactly what Tisa is saying.
Yeah, so
it's like, but of which it won't work in an undeveloped market like South Africa. It won't. It's not sustainable. I mean, like this is a middle class economy. The whole economy will crash. We're all in debt, all of us. Even in here, all of us.
Yeah, I mean, so and to speak to the consumers, like, and I'll speak to myself, and I think even Nico. I mean, Nico's trying to buy a car, in the last month or two, I think, and I think you had put a huge deposit, 30% or so.
Yeah.
And you were still not getting prime minus.
Yeah.
To me, that tells me like something is funny in the economy. If you put a 30% deposit buying a car and you're still not getting prime minus rate, it's because these banks and the economy, they're not giving enough credit to everybody. So they gotta charge whoever that can qualify for credit.
No, that means they're paying for it we'll talk about it when we talk about the next topic that we're gonna talk about. There's basically in basic economics, that means that there's too much money in the economy and it's not doing anything. It's not producing growth.
Yeah, because everybody's being conservative.
Yeah, there's too much money in the economy.
Yeah, but I'm saying the ones that do take credit, they're paying premium for it, which is insane.
I guess that's just to make up also for
from
profit.
a simple logic perspective, that doesn't make sense.
It doesn't.
Like, I don't know anyone who comes with any form of deposit, especially for an asset like a movable asset like a vehicle, 30, and they're not gonna give me prime minus. Like, I would assume, maybe layman's thinking that they would want more people of that, but they have their own reasoning, which we're not privy to as lenders, why they wouldn't give him, Nico, or anyone else a prime minus loan.
For the most part, it's because not everybody now qualifies for credit. So I guess banks still have costs.
They're probably
They still have to give returns to their shareholders.
They might be hedging their risks and saying, okay,
You know what I mean?
Tia spoke about, let's say, a reset in the economy. The interest rates are high now, and the highest they've ever been in the last
10 years.
10
This is since 2008.
This is higher than where we were in pre-COVID levels.
Correct. Yeah.
So this is going to be a proper reset.
You know what? I think the big concern is for me is it's the rate of increase. You look back 18 months, you are at your probably lowest in the last while. You look today, you're at your highest in a short period of time. Rates have gone up at a rapid rate, and we obviously, Teaser started off the conversation by speaking about the Fed rate hikes that we've seen and all of that. Even there, I think they've had the highest over the last
this is the highest
many years, right? That the way they've really had, and it's weird to see rates at like 5.5% or 5% or something like that for US. That's crazy.
But you see, that's a mentality that Lesotho is trying to change. We are too focused on the rate, but we're forgetting inflation. Nobody's talking about this is the highest inflation has ever been in. So especially Fed. The last time when have you seen euro inflation being above 5%? It's been years.
And I mean, to be honest, and we won't get to it, but it was the war. And it feels like the war eased, like Ukraine and Russia. Because that's effectively what started this inflation.
Yeah.
But if we shut out, let's look at it in simple context from a domestic point of view. What is our war in South Africa? It's Eskom. And if Eskom keeps doing these load sheddings as they are, like now, yesterday I was listening to the radio. I was part of a conversation. One of these agricultural economists, that guy's good. I mean, like farmers.
Wandile
Sehlobo. Like farmers, them being affected by load shedding alone, that's driving food inflation high. And South Africa's in our component of inflation, in the basket, what's big? It's food, it's transport.
Yeah, core inflation is high.
So core inflation is still generally high. Even in the US, as much as inflation came down in the recent weeks, the core is still above the headline inflation. So let's shut out the war. Let's leave the Russia, whatever, and the global impacts. Domestically, what is it that's actually driving this inflation high? It's Eskom.
Yeah, and you're quite correct. A point was made earlier on about cost being shifted on to the end user, the consumer, right?
Yeah.
If you think about it, if you own, if you have a store in a mall now has to use diesel, right, to power up during load shedding, and that cost goes directly into the rent that you pay, and then on the other side, it comes back to increasing costs slightly to you. Guys are hitting the warehouses with the fridges and stuff like that, where you have to keep your certain temperatures at warehouses and things like that. You end up passing on the cost because you're using diesel. There's more diesel, and that's the most expensive form of energy generation, right?
For power backup.
Yeah.
To transport
Crazy,
transport the food from the farms to the manufacturers, whatever it takes, that cost is being passed on to you.
Yeah, because even petrol is not cheap either.
We haven't spoken about Transnet yet, but we won't get there. But, transporting the food and all of that via train, cheap way, versus all these trucks that we're seeing on the roads, stuff like that. That contributes to inflation because it's an expensive way of making sure that the produce reaches the warehouse in time and all sorts of things. So
Same thing with if you look at ESCOM, you're using the road. You're using road logistics as opposed to using trains to get coal to the stations. A transporter is going to charge you way more than if it was Transnet. Purely the charge per kilometer. So all that rolls on, and we know it all ends with the man on the street.
Yeah, I must say, I mean, before we move to the next topic, we'll probably get to this when we discuss our properties journey. But we bought 2 properties last year, which are transferring this year. The one that transferred this month, when we bought it, I think it was May last year. Bro, I think the installment was supposed to be like 9K. We're about to pay the first installment next month. It's 14.5.
Yeah.
What?
And
rates on that.
and me and Tsepo, like, we're dealing with tenants. We can't increase rent. Like, we have to figure out what to do. But it's interesting that, like, some of these decisions affect us in real life, and we have to find a way to maneuver and still succeed and still proceed, you know what I mean? And I think when we do discuss the property journey, we'll get to what we are doing to try and work around this, because it's crazy.
Yeah, I'm sure there's, especially in that space of the property market, there's little wiggle room in terms of what you can do, because it's
bro, like, the vacancies are high. People move out. So that's what I'm saying. I think it's a proper property discussion that we'll discuss it nicely. But I think when we were speaking earlier, we were speaking about the hikes, and in America, the one thing that really happened in the last month or two was their banking crisis. We've never seen so many people come in public and tell the guys, relax, your money is safe.
and this banking crisis was different. Like, I've never.
Is it a crisis though, or
it's a matter of, like, people putting money in treasuries. Né? So treasuries, like your bonds, your treasury bills, and they're inversely related to price. So if your price goes up, basically if your rates go up, your purchasing or your price of the bond actually goes down. So they never really anticipated that the interest rates will go up to that level.
Correct.
So it sort of shocked them that when interest rates were rising that much. And it really literally showed maybe that the bank was not diversified. If most of your assets are invested in treasuries, I mean, like, look,
it's a relatively newer bank, right? Silicon Valley.
It's a tech bank.
So
the money they've been, I think they were selling liquidity, that we are quite liquid, but like they didn't invest in risky assets.
But Maiza.
Yeah. So they didn't invest in risky assets, but people forget that even bonds can be volatile. They're safe, but like, they are volatile, especially when interest rates go up and you're locked into the long end of the curve. You'll suffer. Trust me personally.
Yeah.
Was it also not the case of people and the trust around that bank was it's because it's a Silicon Valley bank, tech, innovation.
And then there was that billionaire guy, maybe you guys will help me out of that, who, I mean, when he started moving out money, I think other guys got spooked.
Followed, yeah.
Yeah,
And then-
yeah.
But like it's the fact that the bank was not diversified enough.
So maybe let me just give you the premise of its scenario. So it's a Silicon Valley bank that's based in the tech space in America. Obviously, the economy is so big that they have many banks, unlike South Africa. So this one, it was holding money of people that invest in tech, in Silicon Valley for the most part. Obviously, they can bank anybody, but what happens is normal consumers like me and you would not go to that bank and borrow credit. So they actually had money, but they were not lending it to a lot of people.
Yeah.
So you cannot be a bank sitting on cash
No.
and not lending it.
Yeah.
Your basis as a bank is to make money off interest. So to mitigate their lack of lending, they had to put their money into treasury bonds, which
The first problem for me with SVB was that they effectively had a concentration of certain clients. If you are banking tech companies,
Tech
private
billionaires.
equity companies, and
VCs.
etc., where you end up because obviously during lockdown, the guys had it was a good time for tech companies because we're thinking work from home, everything digital, we were there, right? But what we've seen over the last few months now, was that a lot of the tech companies are starting to suffer, laying off people left, right, and center in San Francisco, etc. Your Googles, your Twitters, and all of those guys, right? Then a lot of people had invested in these companies and put money into the companies. Then obviously the tech companies then put the money in the bank, right? But now the tech companies also start wanting a bit of their money. So that liquidity goes, right? The liquidity starts going from the...
they're withdrawing.
they're starting to withdraw. And then obviously now the other angle is the US treasuries now, which also lose value. But because of liquidity concerns, you have to start selling some of your assets now, right?
At a loss.
At a loss, you're forced to, so that guys can, when they go to an ATM in layman's terms, they can get their money, right? Then now, and I think that's what caused the first panic. That's what's caused the first panic when SVB reported that, right? They're like, no, we're managing this. Yes, we have a bit of an issue. We are selling at a loss, but we are managing this. Then those guys went crazy and said, then they saw the guy, the billionaire, withdrawing and saying, and Twitter and everything. Then everyone went at the same time and caused the bank run.
Isn't it funny how just the power of Twitter, once that billionaire, it became like a roller coaster. Because next thing you're seeing clips of people literally outside the banks, those who couldn't do it like electronically, because the one was like, hey, I got my money out, you might want to do the same. And it causes panic. But like to Tisa's point about how America's big has got so many banks, what was curious for me is this was different to the 2008 recession, where your Lehman Brothers were going out of business, your JP Morgans, AIGs needed bailouts. That was like the majority of the huge banks. In this case, this is probably a pretty large bank, but it's a bank that's a niche bank. It focuses on tech, but it still had an effect on the US economy, just to show the size of a scale of what they were sitting on. They were probably, I don't know, maybe this might be a cliche, but maybe as a tech-based bank, they were trying to do things different. But like Tisa said, the core of banking is you're supposed to earn interest of money.
Gotta lend. You have to be able to lend.
You can't sit on money and not earn interest of it.
And the problem is, remember, these are not retail banking clients. The guys are putting in decent sums of money into the bank. So, and when someone comes and gets their money from the same bank, it's a big deal for the bank.
But you know what? Capitalism, your JP Morgans and them won, eh? Because the guys took their money, took it to JP Morgan, Bank of America.
The traditional banks.
You have to go for traditional banks that are diversified in their income. You know what I mean? Like if you and if we're to try to make it maybe relatable to South Africa, like you want a bank that does housing, that does cars, that does personal credit, that does business banking credit, like, you know, not all those industries will all fail at the same time. And that's what Bank of America represents, like a very diversified business model within banking, because it's all credit, but you know.
Yeah, I think it's their diversification means the probability of at any one time, if one part of it collapses, then it's not going to really bring the bank to its knees.
Yeah.
I mean, like the 2008 housing recession was a bit of an anomaly because of how far-reaching it was. That's why it got that bad. But in this instance, like Miza said, everyone moves their money to the traditional banks because they know, come what may.
And you know what's funny? Which this is one I found quite interesting. When Credit Suisse also then started having issues.
Yeah.
You know what I mean? Like that's a traditional bank, lots of years history, very well diversified, and
Scandinavian country bank.
But
Yeah.
they seem to have like scandals, like not mismanagement scandals, but like spying on people. I mean, like, come on.
but they had structural issues.
Yeah.
Like if you had to compare the two banks, like we literally had a niche bank. There was another one, Signature Bank, I think, that happened in America. So you kind of this niche banks struggling, and then you had another big, quote unquote, struggling because like, bro, that's like over 100 years history there.
And we're talking about Switzerland here.
Yeah,
The
but
banking haven, right? And I guess that's why, I don't know if you guys remember, but an announcement on the merger, Credit Suisse, UBS, it happened on a Sunday.
Yeah.
It happened on a Sunday.
I remember how impressed you were.
Yeah, I was very impressed. Guys are working. South Africa must learn. Guys are working on
That is like me saying I'm gonna bail out Nico Teaser because we're friends and I want to protect their legacy.
Yes, yeah,
Maybe just give the background to it.
Yeah. So essentially, how a bank's capital works, right? So you get different tiers of risk, right? So you know, in a normal company, shareholders are last, right? So shareholders, if your company goes down, then they will pay creditors first, the secured guys, you know, the mortgage, they sell the house, pay you first and all of that. And then there's like a hierarchy in terms of after selling, who they end up paying to, right? So in this instance, banks issue certain instruments, right? So the most risky instrument is called the AT1, which is the additional tier 1, right?
It's a hybrid.
Yeah. So that specific instrument is on the equity class, right? Like semi-equity, like it ranks just after senior debt. So just
as a bond.
yes. Yeah. So these guys issued the ones that they called COCOs, the contingent convertible ones, right? So with these COCOs, essentially, it's like okay, if you default, then we might convert it into equity if you do end up defaulting, right? And then, but the central bank essentially, based on various rules, then will decide on what happens. And the fine print in the T's and C's when you issue that note, the note, right? So for specifically in Switzerland, the central bank decides. That's what it's in there. And then, so what then happened was that when the trigger levels, on the trigger levels, right, the minimum capital set by a central bank. So you need to hold, against the risk you take, you need to hold certain, much. Yeah, you know what I'm saying. So obviously this bank went below, they breached the trigger levels, and then the central bank then has to decide, you guys who own these notes, what do we do with this thing? Do we convert it into equity as in part of the owners of the bank, or we write them off? So then what happened is that they decided to write these notes off. So here's where the problem comes in. Remember in the beginning I said that as a shareholder of a company, you are last. Whatever is left, that's why you normally hear that when a company is liquidated, you got 20 cents to the rand. You normally there's that jargon that's used. So in this instance, you are a note holder, meaning they owe you money. Right? Your whatever money that they owed you, the central bank said they're gonna write it off to zero, meaning you get nothing. Then on Sunday, someone comes and buys the bank.
Yeah.
That's saving the shareholder
Yeah.
over and above the creditor.
The cocos.
Yes, you know what I'm saying. So
It's not a genuine
so
buy.
that's why the big deal was around. I'm actually not a shareholder. A shareholder got a better deal than me.
Yeah, as a coco, you're
I took a
screwed.
bigger risk, but they got you know what I mean?
Yeah, they're
Yeah,
supposed to be last on the
That's,
totem
Yeah,
pole.
that's
yeah.
what I'm saying. Like, so in a nutshell, what Nico's telling you is that I can come because you guys are my friends. I'm like, I'm not going to let these guys suffer. Obviously, you guys were supposed to burn. Ne? Essentially, that's what he's saying. And then maybe me and Cash come and we're like, nope, here's the money. I'll buy the bank. And then you still profit on top of
On
it.
a Sunday.
Yeah.
On a Sunday.
But I think one of the big lessons, like as bankers, right,
Yeah.
that one should take from this is to read the terms and conditions, because
Who reads those
yeah,
in the first place?
Maza, you
That's why
participate
there's a
in
podcast called
you
Business Agenda. I
you
always tell you we
No,
are
no, but in
we are
general-
not the 30% by NG.
Besides us who get paid to read those, but in general,
I
Yeah.
think in general people should change.
Yeah.
I have a huge problem with like illiteracy.
yeah.
I have a huge problem with it. No one wants to read the
Yeah.
Nobody
terms and
nobody
conditions.
reads the terms and conditions, and then they take that unsecured loan at African Bank.
You know, we'll have another episode. We had a issue at our complex with the insurance. They were literally trying to screw us.
Yeah, that's the purpose of insurance.
And then we had to refer them to their terms and conditions
Yeah,
because they just think we didn't read them.
yeah, but that we'll discuss
They
that.
thought they could pull a fast one.
Yeah.
No,
Yeah.
bruh, it's a.
but in this instance, if you think about it, Tizane, Credit Suisse used to be worth like more than 100 billion.
It was in
Not
the
not a
trillions.
long time ago. Not a long time. Then like
At the
it
beginning
got
of the
sold
year.
for 3.
Yeah.
Yeah,
Think about it,
Yeah.
right? This thing used to be worth so much more and got sold for
they had
3.
over $1 trillion in assets, I think.
But I think they also had structural issues.
Yes,
I mean,
yeah,
it was
yeah.
loss making.
Yeah.
Technically, if you think
Yeah,
about it, like a bank shouldn't be loss making.
Yeah.
No,
yeah.
but
My man, if a bank is loss making, it means the depositor's money is being
misused or used.
to fund the business.
So it's been misused.
Yeah. You cannot have, like, as a general rule, even if you invest in banks, you shouldn't look at those financials and see a loss. Not a bank. Because
Yeah,
a bank is, I'm giving you my money, you go lend it
And interest, and then
and make money, and then you pay me interest for giving you my money.
and you run off. You
Right?
run the bank.
That's why that the prime is 11.25. They lend at 20%. They
Yeah.
make the difference.
Yeah.
If a bank is loss making,
The problem.
no.
Now that
Yeah,
means
especially
that,
the difference
that
between
means
prime
that,
and your
that-
20% is like
Yeah.
this much. With a margin like that, how are you running?
But gents, we must never undermine the South African banking system. I think
it's superior.
so. Obviously, after this, then
Superior.
one does look at what happens in SA and
Yeah.
all of that. I think obviously flaws here and there and all
This
of
is where
that.
we give Lesage his flowers.
Yeah.
This is
We can't bash him all the time. We can't bash him all the time.
To Nico's point, it comes back to 2008 why we didn't suffer.
Yeah.
Because our banking system is actually one of the best
It's
in the
intact,
world.
yeah.
It's proper. It's not. This is not Switzerland, chief.
But guys complain about over-regulation in the banking sector as well, right?
Pardon?
I'm saying guys complain about over-regulation in the banking sector. That's
But
why we
like
have
in
a
an
concentration
economy
of
like
banks.
this, Nico, I think we need it because, or else we'll tank all of us. That means,
Capitalism.
yeah. But like South Africa is quite proper. The structure is in place, and it's
Yeah.
Like, plus, if you look at it, the history of many countries that have had issues, collapse of the banks is you never want too many. Less regulations means more mavericks, more, call them like entrepreneurs with great ideas, but through capitalism, sometimes guys will try to work through around the regulations,
Yeah.
loopholes, because ultimately they're chasing bottom line.
Yeah.
If there's room for that, then we've seen the disasters of that, be it South America, Africa, even in Europe and America. So I understand why maybe some of the bankers might say it's overregulated, but to Maza's point, it still needs to be kept in a line where we're not going to wake up one day and then, like you've seen in
And
some
also,
countries.
if your shares are not the most growing and your shareholders are not happy, you'd rather be dead.
And
You know what I mean? Unlike trying to
instability,
like
yeah.
a bank shouldn't be competing with the tech stock or like the stocks that shareholders get more value for investing in those than a bank, for instance.
Yeah, a bank. If a shareholder invests in a bank, should know traditionally what they're gonna get from being a bank.
Consistency,
Standard that you know that
no funnies.
nothing funny. You know the rate of return, and it's almost they should stick to their guns. Where if they feel shareholders or potential investors, no matter how much they're bringing to the plate, are going to start pressuring them to say we want the returns that are coming from mining or tech, whatever.
Yeah.
Then the banks need to say, go and invest there because
Yeah.
this is what keeps us stable and in business. Because, like Jesus said, Credit Suisse is a bank that's got 100 years of history.
Yeah.
And then overnight you're doing deals on a Sunday.
But I wanted to ask: are we over-regulated, or are we like the teachers' pets, following the rules more? Because those 81s, those are Basel III requirements; those are international standards. So is South Africa the ones who are too strict?
South African banks are already adopting Basel III. Most banks adopted it early.
Yeah.
I remember, I think as early as 2018 maybe.
Yeah.
Like the banks were starting to adopt it and factoring it. So I don't think we are. You're saying teachers' pets?
Teachers' pets, because already Basel III was already in discussion in 2012 when I was in a risk management class.
Yeah, look, the difference is, I think the difference is in South Africa, at least for the most part, even though we are grey listed, that's another thing that happened, which is crazy. Like with all the relations we have, we are being grey listed for the loopholes. You know what I mean? Like it's very easy for fraud to happen in South Africa, money moving out of the country and things like that. Like, so you could also make a point to say the reason we are grey listed is because of the loopholes.
Yeah.
You know what I mean?
The corruption.
But we've been tested before with a bank failing, the popular one, African Bank, right? I remember had just started with a certain employer there at the time.
Things were moving.
Yeah, things were happening. So and then I mean, African Bank it seems like it's out of it. It's coming back now. It has recovered. So as a case study, as a dipstick into the South African banking system, I would say that yes, we can complain about the over-regulation, the lack of competition, all sorts of things. Like you can't walk out and start a bank tomorrow and all of that. But the banks that exist that have been tested, the traditional South African banks that have been tested, it seems like the systems in place are actually quite effective to make the bank survive.
I think we're also proving that having multiple banks, it's not. I mean, like before the mergers, your amalgamated banks. I remember we used to have your Sambo before your net groups. Like South Africa, we had a lot of banks, but we're proving now to the world probably that we actually don't need a lot of banks. I know some would argue.
Look, competition is generally good. You know what I mean, but it shouldn't come at the expense of the depositors' money.
Yeah, definitely.
That shouldn't be the case.
Definitely. Yeah. But I'm glad your African bank and them changed their ways of thinking. But
yeah, so I mean, maybe just to try, move on to the next one. The interesting thing that also is happening is, Russia. Obviously, the economic sanctions happened, and they were forced to find other ways to operate, and it looks like Russia is now looking into BRICS, to operate and to try and still sort of get economic activity in their country because they do have a lot to offer, so to speak.
They've got oil.
Yeah, so
gas.
BRICS is what? BRICS is Brazil, Russia, India, China, and South Africa. Yeah. Correct.
All the resources in the world, Brazil and South Africa alone.
Yeah,
we've got a lot, man. And China has been stockpiling. Basically, all the countries that you mentioned there are backed by something.
Yeah, but I want to preface it with this. So in World War II, like I don't know, 1940,
Oh, yeah.
whatever.
The Allied forces.
There's a huge war happening globally, and a bunch of people came and sat and said, look, we cannot have this happen. And they started to say, we need to regulate everybody globally. And then what they did is they pegged most economies against the dollar.
The
And this
petrodollar.
was at the back of, I guess, America. Very smart of them to say.
Bretton
And then they
Woods,
start what we call IMF.
the Bretton Woods organization.
They start World Bank, and and most economies today, as they exist, they are kind of backed by the dollar for the most part.
Not-
Cash would tell you, even in Zim, when the currency
Yeah,
deteriorates,
immediately.
they reverted to the dollar. They could have chosen another one, but
It's exactly like,
Like-
and even if it's funny now, if you were to Google as it stands, which currencies can operate, they'll tell you in Zim you can use the Chinese yuan, you can use the pula, you can use the rand. It's,
Really? Can you
Yeah.
use the?
But see, that's the thing. That's the one. That's officially the Reserve Bank in Zim will tell you that. You can Google that. Some banks, but it's on the street.
in real life,
In real life, it's just the US dollar. Like, like let's to call it a spade. If you want your things to be simple, it's the US dollar, because that's what it's just the what the backstory that Teaser gave you is the US were then smart post the war, World War II, to then make it the currency, that because then what then happens, it filtered and became central to all transactions globally. Where like most places, you could be in a very remote country, but if there's a bank, if there's a bureau of change, even if you've or done as a club, American Express, it would be backed by US dollar. They made it
So
a flat currency across the globe.
Do you guys really think that the dollar has ran its course?
before I answer that, just to give context to what they're saying, after World War whatever, I mean, those who studied international trade will know about the gold, the dollar standard, gold standard, and then the petrodollar was created to say, look, guys, now we're gonna pay our debt, or if we're gonna do import or exports of oil, let's use dollar to pay. Those debts. It's all in international trade, and those are the dollar standards and petrodollar standards as well. So now everybody's talking about you see the TikToks and all, like, yeah, what's gonna happen?
we are not on TikTok.
Okay,
We are not.
so to get to Nico's question, right?
30%.
To get to Nico's question, right? What's going to happen if you're saying if the dollar is superior? So I'll tell you what will happen if we dump. It's a matter of dumping one currency for another, and then if you dump that currency to say I'm no longer going to pay cash in dollars, but I'll pay them in rands, then I don't have any use, or the cash's economy does not have use for that dollar anymore. Basic macroeconomics, again, the LM curve, to say that maybe there's too much money floating in the economy. What does the Reserve Bank do to protect or to reduce the level of money supply? They increase rates. So interest rates will continue to go up.
The problem is America is the problem.
Are they?
To be
Or they
honest,
became
like,
smart?
so obviously the having a currency that we can use globally, there's a benefit in that, right? Like you said, if your country crashes, you revert to dollar the following day and you continue trading. But the problem is, then we are all reliant on what's happening in America.
Exactly. So that's what we're saying, that if we dump the dollar and we use China, and then China's backed by BRICS, and then Saudis are going to join us, do we really need
So my thing is, if America is having issues because they are going through elections and they are going through their own scandal, why shouldn't we pick another currency that's stable?
It's a simple question, but it comes to
it's not easy as well.
I know. For me, just as we're talking about from a historical point, why they did it and why it was smart for them. But then if we come full circle to Teaser's question is, at a very basic level, it should be, we should not be handcuffed to the US dollar, especially now when that decision was made, America was a superpower in terms of military, juggernaut in terms of production. But now if you look at China having caught up, the formation of BRICS, if you look at Russia and even India, like Maiza said, they're making intentional moves to bring in the Saudis. They ended the conflict, a long-running conflict between Iran and Iraq. I think there's oil agreements or benefits from getting those conflicts to stop. So now if we're trading, if those countries now start trading, and we've all started, Russia had their own agendas, the fact that they were kind of made a pariah, so they needed to find other ways to operate. But it just comes to full circle to the thing of we should not really be tied to the US dollar.
Yeah, and I think my concern is really surrounding the fact that US flexes its muscle when it doesn't get its way with the sanctions and stuff like that. And with what happened to Russia, the first thing was that Russia was removed off the global payment system, SWIFT, and all of that, and they thought that was going to tank Russia, right? And then, but fortunately for Russia, it had already started having bilateral currency trading with whoever they were, the counterparty was, right? And that for me sounds more right to remove the concentration of power from the US to a larger scale, right? To more people. But the concern now is China and Russia probably, it looks like they will be the new sort of powerhouses, global powerhouses going forward, right? But what does that really mean for you and I, as South African, or the rand, essentially, right? And so I thought about this. Like, you have 20 rands today to go buy a loaf of bread, however much it is, right, in South Africa. But if the dollar weakens and your rand is worth more globally, for things that are produced locally, like bread and whatever, still might be fine. But you may find that 20 rands now affords you bread in the US or in Switzerland or wherever. You know what I'm saying? So globally, South Africa becomes more competitive. And what that means is then South Africa can probably go borrow more globally, improve infrastructure in an ideal world and all of that, right? So I was looking at it from that perspective of what exactly does it mean to you and I, or a South African, or South African.
I can also tell you another one. I mean, we're busy speaking about Lesotho. His mandate is also currency protection.
Price stability. Yes.
Like, if the dollar keeps improving, he has to hike rates to give returns to the international bondholders of this country.
Definitely.
So if America keeps benefiting by their dollar, even though we have issues here, like, I mean, we increasing rates, but no one is investing in our country. So it's like, it's becoming at our expense. You know, at some stage, bro, 2002, I think, between 98 and 2002, prime was like 24, 25%. Imagine that, borrowing at a bank at 25%.
Chance, I shared the other day what it is in Ghana, right? Remember, I said like 40-something%.
Yeah,
inflation is actually also like a crazy number in Ghana as well.
Yeah, so I think the other benefit will just be that, like, the Reserve Bank will not have to make a decision of one currency. You know what I mean? Like, if the other country is going through whatever, we should switch to Russia. If Russia has an issue, we switch to China. If China has an issue, we go back to America. Like,
maybe we need to get
flexibility is not bad.
Like, strategies for that, but it's not going to be.
No, of course. I mean, it's not an easy thing. Like,
it's not good. Yeah.
What doesn't make sense is for the rest of us to explain to people why petrol is now 25 rands per liter.
I mean, like, I'm glad we started this whole session with interest rate, banks, and whatever. To your question, to answer you, to America's benefit.
It is to their benefit.
That currency should be strong. It's one big bank that needs to earn interest globally. That's why it will cause a massacre. They'll fight for it.
Yeah,
but
They'll fight for it.
they will definitely.
That's why they have the biggest army in the world.
Yeah. Did you guys see the new budget, the US budget? It's like, even if you add the it's specifically military, whatever they budgeted for, I guess the year or whatever, you can add all the countries, and then you won't get to what they budgeted for this specific year going forward.
Just for the military,
bro.
Yeah, so gents,
I
guess you guys can gear up for World War III.
There's an American base in Botswana.
He's
Why? Just in case. That's their reason. Just in
There's
case.
American based in Botswana. There's one in Hawaii. There's one in Guantanamo Bay is off the South America, somewhere there. Cuba, even in Cuba, they've got conflict. Some islands, of course, Atlantic, they've got bases for that just in case.
You know what's weird about South Africa? We've had military drills with Russia, China, and the US, by the way.
Navy drills, yeah.
So I don't know where we are.
No, you see, I don't mind the options. In currency, we just chose one. But in the army, we don't do the three. There's nothing wrong with also exploring the same with the three. Like,
I think ultimately
Are we part of NATO? Just a quick one. Are we part of NATO?
we are in Africa, but
We're not part of NATO.
NATO is for
we're in Africa.
that part of the world.
Okay.
Yeah, but I think
I'm just saying, should there be? Remember in World War II,
We are an alliance to NATO.
yeah, we are an alliance because remember in World War II, South African troops. were
Cyril
there as
decided not to. We didn't.
sorry.
We didn't condemn Russia.
yeah, exactly, and that set the precedent.
But why are you
we
supposed
also didn't say we agree with Russia.
Yes,
That should tell you where South Africa
I think
stays.
exactly. It was a very strategic.
to sort out your mess?
It was a strategic.
And then they're forcing us to arrest Cyril. Who's going to arrest him?
I think
not Cyril, Putin.
my conclusion on this matter is I think what Tisa says makes sense, that we need flexibility because, look, nothing lasts forever or cast in stone. Look, there's a reason why at some stage that arrangement with the US dollar being the standard made sense. But I mean, even with the UAE, with gold and other options, with crypto, with what's going on with the banking systems, that they can't be hard and fast and will continue to want to strong arm the rest of the world to have their currency. And what you find was Russia basically took a bad situation and have now put in motion. I think China in the background, they were already building up to look to become, because they're trying to gain, and we all know China on the low wants that number one spot as a global power, as a currency. So if they, through bilateral agreements throughout the world, can get countries to start trading between the one and your currency, imagine South Africa trading with China, which is one of probably the biggest importers of goods, rand to one. If the rates are more favorable, then that's a given. It's something that happens in the future. Obviously, other effects, it's not that simple. We need currency people to tell us what the permutations are. And the US is not going to take that line down.
And it's going to take time, Cash. Like the stats are 90% of global currency is the dollar.
That doesn't change.
Yeah.
So China's, with all their efforts, they only gained 2%.
Yeah.
You know
it
what I
took
mean?
them
So
50 years to get to
So you
where they
kind
are.
of want to get America maybe to what, 60%? That's gonna take years.
But also here's
Years
the another trick, guys. The China outside of America, China owns the most dollars.
Yeah.
You know, like with US treasuries. Obviously, we all own. Most countries own these
China owns
treasuries and
most
whatever.
of
So
America's debt, yeah.
it's more like you.
And if you passing at 30%, you wouldn't know that.
so there's a high chance that you end up losing some of your investments that you hold in USD. Apparently Chinese are the most outside SA, property wise, they own most properties outside SA. Outside China, they own most of the properties and US assets and things like that. So you are basically, if China does really push ahead with everything with Russia and all of that, the consequences will be there for everyone, including the Chinese.
Yeah, because they hold the most US debt.
Yeah, that's
So interesting times, but I think Tisa said, look, to conclude this topic, it's gonna take a while. Like even for China to become the country it became now, from the chairman Mao policy of everything made in China, that took nothing short of 50 years.
Yeah, and also like, bro, as the podcast grows, bro, it will be nice to chat to that Deliseja. You know,
I've ever sit down with him and hopefully we won't be brief.
Wouldn't that be nice?
It'll be nice.
We have an independent view.
It'll be nice if we're not briefed by his handlers before on what to and what not to ask, like a free open discussion. Yeah.
But so I think great episode, gents. Thank you so much for making time. I think Cash is not 100%, but you still managed to come.
But you did well. Yeah. I hope you
Yeah.
did well.
So,
Thanks, Cash.
so
Cheers, Jen.
yeah, and then
And
maybe
happy
just
belated.
my boy.
How can we forget that,
Nico,
bro?
Nico, do you want to do the honors?
We are doing the Joe Beck edition, buddy. I did Cape Town, I did Free State. Now we must do Joe
The man
Beck,
is tired.
No.
Nah, I'm not that young,
No, just to close
but
off.
not that old.
Just to close off, we wanted to say happy belated. Yeah, Cash, man. Get well soon, buddy.
Thanks,
Yeah.
man.
Nico.
And Cash's birthday is coming as well this coming
Yeah,
week.
so
yeah,
nice.
Oh, yeah. There's a lot of April babies here.
yeah,
Plenty,
yeah.
Eh?
Nico's little man as well.
Eh.
My boy, yeah.
Yeah, that boy must stay away from my house. Yeah.
Yeah, but gents, it's good to be back with another episode. I think it's a lot that did happen in the interim, and I think the way the year looks to be panning out, definitely gonna have more guests in terms of topics we're gonna cover. People we need to bring in. Obviously, Nico, we will refer to him without Miser having to say our
Nico will come in here.
Nico will come in here.
No, now he needs to come in.
Yeah, I think he's getting the knack and the art of just knowing when to plug in. But look, great episode. And as always, I think we say to our followers, we truly mean it. You know, we're on socials. Any ideas for topics, guests, people you want us to discuss, feel free just to drop us a DM. And even if it's a topic, not a guest,
Not 30% topics. I got to work about Tabo
What's going
backstage.
on here?
Yeah.
Hey, boy.
Hi, birthday boy. Man.
I'm growing, so
Yeah. So this is what 40 looks like.
Tolerance levels have
Cheers.
lowered.
Thanks as
Gents,
always. So
thanks.
yeah, you can view this podcast as always on YouTube. Listen to it on Apple Podcasts, Spotify, or wherever you get your audio DSPs. Spread the pod, pass it out. Check us on Instagram, and we'll catch you on the next episode. Cheers.
peace.
Peace.